Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. I'm presenting Asian Session Live Market Analysis now between 5 and 5:45 GMT. I will use the live market code page and try to review the four majors and the two commodity pairs and explain to you what could be the possible type of moves we could see it in the market. And also for this particular week, the forecast, the expected market moves for this particular week, also I'll explain. And then in order to fine tune the forecast, I'll be explaining the market reading technique. With the help of that, you will be able to fine tune the forecast and try to find out what sort of moves they are expected to make in the market in sequence. As a result, you will be able to take appropriate trading decision whether to do a sell and buy trade or a buy and sell trade in a specific currency pair, and also you will be able to take a decision whether it is a right time to take the position or not. So for that we will be using the market timing and the live market code page, and also see whether they are making the USD gaining move or the USD weakening move or the contrarian move. So before going to the forecast for this week, let me explain to you the market reading technique. Now Euro is currently trading around 1.310609. 1.3114 is the high, 1.3090 is the low. 16 pips negative net change is seen. So that means Euro is currently trading 16 pips below that of the Friday close. And in the case of USD Yen, it is trading around 98.39, the high is 98.70, the low is 97.89, and 56 pips positive net change is seen. Then also in the case of GBP, it is currently trading around 1.537477. 1.5400 is the high, 1.5366 the low, 47 pips negative net change is seen. So Euro and GBP are showing negative net change. USD Yen and USD CHF are showing positive net change. That means the majors are making the USD gaining move. So Euro is the numerator here and GBP is the numerator. When the numerator comes down, the negative net change is seen. When the denominator weakens, like USD Yen and USD CHF, in that Yen and CHF or the denominator, when they weaken, you find the positive net change. So the majors are showing the USD gaining move to start with. But in the case of commodity pairs, USD CAD is trading around 1.049296 or 95. 1.0499, just 1 pip below that of the psychological level. 1.05 is the high, 1.0472 is the low, 32 pips positive net change is seen. Of course, it is USD gaining move. But Australian dollar, it is currently trading around 0.92189222. 9252 is the high, 9192 is the low, 4 pips positive net change is seen. When Australian dollar shows positive net change, that means it is making the USD weakening move. So Australian dollar and Canadian dollar are showing the positive net change, as they are. Australian dollar is the numerator currency and the Canadian dollar is the denominator currency. When the positive net change, it is a contrarian move. So when they show the contrarian move, we understand that they are handling the crosses of the commodity pairs. So the commodity crosses are being handled at the moment, thereby they are showing the contrarian move, whereas with regard to that of the majors, they are showing only the USD gaining move. So this is what you first of all identify, whether they are making the USD gaining or USD weakening or a contrarian move of this nature. So wherever you come across a contrarian move, you can understand the respective crosses are being handled, and they'll be making the spread between the high and the low more than 50 pips, 60 pips and things like that. Also net change will be high whenever they handle the crosses. So when they show the contrarian moves and handle the crosses, other crosses might be making the subdued moves. So what we understand is we have to find out whether they are handling the majors or the crosses. And also we have to see whether the major is closer to that of the low or closer to that of the high. Now Euro is in the middle level between the high and the low. USD-Yen is in the middle level, and GBP is also in the middle level. USD-CHF is in the middle level. So you find that all the currencies are in the middle level between the high and the low. So indicating that they are not the appropriate levels to take any position. When they are closer to that of the low, then we can take a buy. When they are closer to that of the high, we can take a sell. But they are in the middle level. And also we look into that of the time. So the time is 5 GMT. So it is a mid-session. So whenever you find that market is in the mid-session, let me explain to you the session timings with the help of the other slide. So Japanese session is 0030 to 7 GMT, and we are currently at 5 GMT. So it is in the middle of the Japanese session, and or you can call it as session 1. And the European session is from 7:30 to 13 GMT. Then US session is from 13:30 to 20:30 GMT. In between the sessions you come across the gap times, and during the gap times they make the false move. So if you want to trade the majors, then either you have to take in the early Japanese session or the late Japanese session. How do you define early Japanese session? So it is 1 hour and 30 minutes from the start of the session. So 0030 is the start of Japanese session, and add 1 hour and 30 minutes, it becomes 2 GMT. From 0030 to 2 GMT is the early session. Then subtract from 7 1 hour and 30 minutes, that will be 5:30 GMT. So in another 30 minutes or in another 22 minutes, you will come across the end of the mid-session. Then the late session will start. So late session will be from 5:30 to 7 GMT. That will be the late session. So during the early and the late sessions, they will be handling the majors. And during the in-between sessions or in the middle of the session, they handle the crosses. So if you understand this, then you will not be watching the market 24 hours. You will only watch during start of the session, end of the session, in order to take a decision if you are trading in that of the majors. So there is no need to look into that of all the 3 sessions. And whenever you find time to trade, and during that particular session, you can just watch the early part of the session and the late part of the session if you are trying to trade only with regard to the majors, the 4 majors. And you may watch Japanese and the European, and maybe it might be too late in Australia for US session, does not matter. And you may think that Japanese session is subdued, European and US session the market might be active, so I'll be missing it. So there is no need to think like that, because there are days during that time you find the US session is also subdued. They make active moves during that of the Japanese and European session. So we have to understand that they continue to give equal trading opportunities to that of the traders who belong to different countries. So only thing is, if you patiently wait, you will be able to identify the quick moves happening in the market and try to participate. And whenever the subdued moves are seen, when the market is in the middle level, there is no point in taking position. Suppose around 3 GMT, if you have taken a buy position in Euro or GBP, hardly it will be making 1 or 2 pips profit. So in such a scenario, it is not appropriate to take a position when they are making subdued moves in the market. So it is better to take positions whenever they are making quick moves. And I already explained many times that quick moves are false moves in the market. They quickly gain the levels to offload the position, quickly drop the market to buy positions. So that is what they do it. Because of the quick move, we become afraid and we find that the market might endlessly make a drop or endlessly make the rise, and we close the position when it is making loss, thinking that it might lead to that of the margin call. So it is all our assumption. We assume that the market might bring in a margin call to our position. How? Because one or two times you would have left the position without a stop or the hedging order, then the market would have made a massive move and attracted the margin call. And that fear will immediately be triggered in the mind, and also you might recollect what happened earlier. Then you try to close the position with a loss and later on repent, oh God, I could have avoided closing the position, and that was the turning point for the market to go up. I could have just waited, because even though I was having adequate equity, still I closed the position. So this happens because you take a distressed decision at the 11th hour. So you are trying to do the crisis management. Whenever you try to do the crisis management, you are bound to make some mistakes of that nature. But if you have a contingency plan, suppose I got a buy position and if the market is expected to gain as per our analysis, but suddenly it makes about 30-40 pip drop before making a rise, if you use the hedging order or a stop, then you are able to get the feel that I am taking only risk for 30 pips or 20 pips and I am not taking unlimited risk. So when you take a decision beforehand, as soon as the position is taken and you are able to keep the hedging order, then the fear is not triggered. The market makers make quick moves in the market for during the data release or any other occasions, event or a breakout news, mainly to create the confusions with the traders. And you become victim to that if you have not planned the trade, envisaging that the market can go up or come down. So if you envisage if the market can go up or come down, then if it goes up, okay, this is my limit order or take profit level, thereby I'll be able to close it with 50-60 pips profit. In the event if it drops, what are the plans I have? I have only one plan, pray to God not more than drop, further drop, or just ask other analysts whether there could be further drop, further drop, further drop. So after asking all the people might say that okay, there is a strong support around a particular area, so the market might reverse, and your mind says that no, I think that the support is going to become a resistance and the market is going to drop further down. Then you close the position and afterwards the market reverses. Then you say that okay, that particular analyst was correct and the market is reversed at that point. I could have kept, but whatever it is, I could have done that. I could have just retained the position. We can simply repent, but ultimately the action has been taken, and that is a distress action. So what is more important in trading is avoid making distress action. That is the first step. Thereby you will be able to consistently earn money from the market. And we hear there's statements and things like that, nearly about 90 to 95% of the traders are losers in the market. And still you find the traders continue and try. various method, various type of analysis in order to enter into the market. But equally, you find the traders also go away from the market. And so it is a cyclical process. In that, some traders might come and some of the old traders might disappear, and all going out say that I lost badly in the market. I just lost 3 accounts in the market. So no more trading. That's what they say. And those who are those who are successful in trading in the 5%, that's what the estimate says. They don't talk to anybody. They silently trade, focus on their trades, and they don't just divulge their ideas mostly, and they simply or calmly trade and silently make money. And they may lose in 1 or 2 trades, but they will be making net profit in every position or every type of analysis they make. And you find that they don't have much time to share with others. That is what most of the occasions you come across. So when I lose heavily in the market, then I find that my analysis were going through and were perfect, but I was not in a position to control my emotion. Then I become a very big analyst, and I continue to share my ideas with everybody and see that my analysis is being accepted predominantly, but I don't trade. Because in the inner mind, I don't have the self-confidence. So I don't trade, and I only advise others to trade. That's a scenario comes in. So we have to understand where we stand. Are we trying to cheat ourselves? Are we frank enough in accepting what is happening in the market? Are we in a position to find out the market is being manipulated? How exactly we can overcome such situations? If you boldly look into that without being afraid of anybody, because as long as we are human, there is no need to become afraid or become subordinate, or there is no need for us to hide certain facts. And these things are very, very essential, but we try to limit our expressions and try to talk the truth many of the occasions, and thereby we try to cheat ourselves. For what? If you question, we are trying to cheat ourselves. For what? Why not we accept the reality, and why not we speak about the reality, what is happening in the market? And very few people have come forward to talk about such scenarios which is happening in the market. So ultimately we have to find out that the market timings, the early and late sessions, we can focus on the majors, and also we can try to take positions when the particular currency is closer to that of the low or closer to that of the high. And once you take the position, try to close the position within the session or within the day as a swing trade. So if you could focus on this method of trading entry and exit, then use an additional input of trading strategy. Keep 30 pips hedging order to limit the risk, because we cannot afford to take unlimited risk with limited equity. So wherever you are taking a buy or a sell, keep about 30-40 pips below that a buy or above that of the sell. Keep the hedge order, and if the hedging facility is not available, keep stop. Accept when the loss is small. And if you magnify the loss, allow the loss to grow, then you find it extremely difficult to control. And in the process, what happens, you try to go in for a crisis management of taking an average and try to close all with a minimal loss. In that process, you try to take additional positions in quick successions without understanding the market can make a very big spread. So when euro is was around 1.34 and which has come down to 1.31 area, 300 pips. If you try average every 30-40 pips, what will happen? You just imagine all the positions will be making loss. So instead of one position making loss, if 5 positions make loss, then the loss become 5-fold. Then your equity will not be able to hold it. Even though you know very well they cannot drop it to 0 and they have to reverse it at one point or the other, but your equity does not permit, which is one of the main triggering factor for the market fear. So when you have lesser equity, understand you can only take positions for about 1 or 2% of your equity the positions. Then this sort of pressure will not fall on you. So ultimately understand that equity erosion is the main trigger, even though the market has dropped 50 pips or raised 50 pips. The equity, when you constantly look at it, you find that it is getting eroded. When the equity is growing, again which triggers your emotion, you become greedy, not to accept the profit which is visible. Instead, you try to maximize the profit without any strategy. Then you find suddenly the market reverses and all the equity what you have seen as a growth has disappeared. So when the surprise grips in, then the market fear comes up. And this market fear, you start sweating and you become helter-skelter and you are not able to decide what to do and finally end up in closing the position. And some people who have got more equity try to add more positions and find that the overtrading has led to a disastrous condition and erode the equity to 50 to 60%. And then try to trade with lesser equity, and in order to build up, again when you do a similar trade, you continue to lose. So predominant of the traders, when people say that they are losers in the market, it is all the calamities they create for themselves. It is not the market. There is no point in blaming the market, and we have to blame ourselves because the self-realization has not happened. We fail to understand the market can make about 100 to 200 pips on a daily basis, and it is a 24 hours market. They cannot simply make into 15 pips move throughout the day, all the 24 hours. They have to necessarily breach the high and go above, breach the low and go below, and that's part of the game. So we need to understand whether they are going to breach the low or breach the high, and thereby we'll be able to take appropriate trading decision. And it is very simple. During the session start or the close time, if you watch, they will either make a downward stop and or an upward stop and. When they make an upward stop and take a sell. When they make a downward stop and try to take a buy. And our reading might be wrong, so keep 30 pips hedge order. Below the buy or above that of the sell. Once the market reverse, you kindly remove the hedging order and keep stop at entry so that you avert the loss. So if you could do this, you will find that nobody need to give you a forecast. Because I find that many of the people feel that the forecast has to be 100% perfect, and only then we'll be able to take the position and make a very heavy bet in the market, and I can give it in writing or I can speak in a public forum. Nobody will be able to give 100% perfect forecast, and everybody talks about the risk management. Everybody recommends the stop when they say that, okay, this is the entry level or this is the exit level. They always try to caution the traders with the risk disclaimer. So what it refers to, it means any estimate we do, there could be an element of error involved in it. And in the element of error, how exactly we manage our risk, we need to understand. So it is not the forecast which is important, it is the risk management. which is important in order to consistently earn money from that other market. And you're going to trade today, so you don't have any pending position. Then you can simply keep the initial low and the high set for the day and try to trade when the market is closer to low or closer to high, especially during the early part of the session or the late part of the session. Also keep in mind, they make the spread for more than 40 to 50 pips between the high and the low in order to select a currency. If the spread between the high and the low is less than that of 40 pips, then don't enter into the currency, because they might make only a mere consolidation. And in that, hardly you will be able to get about 5 to 10 pips profit. So, if you could use the rules effectively and remember all the simple rules, then you find that trading becomes easy. The timing for the trading, you can choose depending any 2 sessions which is convenient for you if you are a full-time trader, or whenever after the job, after the work, if you are able to come and watch the market for about 3-4 hours, still you will be able to decide on the trading. So you have to ultimately trade at ease, and by simply inviting stress, you don't gain anything. Because if you develop stress, which gives the mental tension and unnecessarily spoiling of the health, and what for you are earning the money? The money will be spent with a doctor in order to recover from the ailment. So the main purpose of earning the money and trying to lead or enhance our living status is being defeated if you do a stressful trading. So find that you are able to leisurely trade, because I find many of the traders, even on Saturday and Sunday, contact me and call me and find out what is going to happen then on Monday and things like that. I can only suggest what can happen, but there is no guarantee that it should happen. So in such a scenario, if they continue to call and contact me and things like that, I can only understand the level of uncertainty in their mind. So the holiday also they spoil by thinking about the uncertainty, whether the market will open with the upward gap or a downward gap. So always recollect about the different weeks and then think about the market could make a big moves, things like that. Then the fear grips in and you are not able to really enjoy the vacation with your family and things like that. And invariably, in the process of earning money, you make life miserable. So please avoid such things. That is what I thought that I can take about 10 to 15 minutes explaining to that of the traders. Many of the traders give importance to their emotions, fail to recognize their own mistakes, and fail to accuse themselves rather than accusing others. So those things invariably make them become a bad trader, not a sensible trader. Let me explain to you the expected market moves for this particular week. So this is the last week of the month. So 24th to 28th trading days, 24 to 28. The 5 days will be the last week. So whenever you come across in a particular week the month gets over, and in a new week the new month starts, then for about 10 trading days the market is expected to make very aggressive volatile moves, and I call it as a monthly trend reversal move. So they are expected to make the monthly trend reversal move, in that suddenly for a day or two they may rise, and suddenly for a day or two they may drop and rise, and you will find that the market sentiment does not hold for a longer time. So that sort of scenario you are expecting during this trend reversal time of this week and the next week. But still you will come across an upward bias with regard to the numerator as well as the denominator currencies. So they are expected to gain the levels. So Monday, today, swing and rise during the Japanese session. They are expected to rise to a closer Japanese session, followed by a dip during that of the early part of European session, and firm up. Slow firming up could be seen during the late European session, and swing and rise moves be seen during the US session. So during the US session they are expected to rise. So there is no weak beginning false move as such. It's the last week of the month. They are expected to gain the levels on today. And in the case of Euro and GBP as well as USD-Yen and USD-CHF, and tomorrow swing and rise during the Japanese session, and swing and quick rise during the European session, and a dip and then rise during that of the US session, or the expected type of moves. Then 26th and 27th, they will be making initially the dip or a drop during that of the Japanese session, then followed by that of swing and firm up and swing and rise moves, quick rise moves. And US session they could make the swing and firm up and a rise move on Wednesday and Thursday. So on Wednesday and Thursday they are expected to make some aggressive moves in the market. A dip can turn out to be a very big drop or an extended drop because it is being month and time. Then on Friday they are expected to make swing and slide move during Japanese session, and swing and quick rise move during European session, and then dip during early US session and rise during late US session are expected. So invariably in this particular week we will come across the first 2 days gain, the second 2 days of big drop, and then Friday again they are expected to make the gaining moves. The next week, 1st to 5th of July, it will be the first week of the month. The trend reversal moves are to continue as volatile moves and late with upward bias. Every currency will try to gain the levels in that particular process. Now, you know that it is the end of June, so it is a second quarter. And you would have noticed in the month of March, the last week of the March, we have seen aggressive and volatile moves of an extreme nature. Similarly, this time again, it is the end of second quarter. So the market is expected to make very aggressive moves, and don't aim to do any position trade. Do only swing trade. Whenever they make quick drop, you buy. Whenever they make a quick rise, book profit. Within the session or within the day. Don't hold it for a longer time, and this week and next week. And you can do either way trades in this week and next week. Whenever there is a quick rise and stop cutting the new high, you can take a sell and book profit during the drop. And whenever they make a quick drop, you buy near that of the low when the new low is not been breached, and try to book profit when they reverse the market. And that sort of quick moves are expected to happen in the market slowly from today onwards, and suddenly you will find that Tuesday, Wednesday, Thursday, the market is expected to make big moves with regard to the net change, like 100, 150, 200 pips net changes either way. Keep that in mind. Now, with regard to the initial lows and the highs, let us see what they have done it. So 3:30 GMT, I have made a note of the initial lows and the highs, and currently it is 5:34 GMT. So Euro formed the low 1.3090 around 3:30 GMT. Still it is not been breached. High is 1.3114, which is also not breached. And in the case of GBP, 53.70 was the initial low. They just made the dip 53.66, and 54.00 is the high, which is not breached. So they made the downward stoppant or a brief dip in order to handle the crosses, Euro GBP cross and Euro CHF cross. They just made it below that of the initial low. The initial low set around 3:30 GMT was 1.5370. That you have to keep it as a reference level for you to understand the sequence of moves. In USD-Yen, 97.89 is the low, 98.70 is the high. They are not breached the low or the high. Then USD-CHF, 93.45 is the low, 93.80 is the high. They are not breached. And USD CAD 1.0472, 1.0499, they are not breached the low or the high. Australian dollar 91.92 and 92.52, they are not breached. Excepting excepting GBP, no other currency they have breached the low or the high. So market is making subdued moves at the moment, and they are trying to handle some of the crosses in the mid session, and later on they are expected to make the big moves in the market. Currently, if you look into the live market quote page, all the currencies are showing the USD gaining move. Euro, GBP and Australian dollar, the numerator currencies are showing negative net change, and USD Yen, USD CHF and USD CAD are showing positive net change as USD gaining move in both the majors as well as the commodity pairs. So as I explained, from 5:30 to 7 GMT will be the late session. So they have finished handling the crosses when Euro, USD CAD and Australian dollar was showing positive net change, and now they are doing the USD gaining move for the start of the late Japanese session, and towards close of the Japanese session they will be showing the USD weakening move. You can just see how they are going to reverse in a matter of about 1.5 hours. Then you will be able to understand the players are following the session times more importantly than any other aspect. And gaining or losing the levels is not the prime objective of the players, and they want the market sentiment to be created so that the traders become bullish or bearish in any particular currency, then commit positions. Simply becoming bullish and bearish, they don't play, and they want the traders to commit. The traders might become bearish, but still they might be afraid of taking a sell position, and they may try to wait and buy. Then they will make for the drop and induce all the traders who are trying to do buy and sell trade to do sell and buy trade. Once they commit sell, then they reverse the market and take it up very quickly using some event or a trigger and induce all of them to do the short cover. So they are here to grab our money, and you have to be smart enough, and that is vital. So there is no point in telling that they are giants, so I am unfit to trade. So it is not like that. Everybody is capable of doing successful trade. Only thing is objective understanding of the market. Simply what is being told openly in the market, if you try to trust, then you might face certain disappointments. But what is untold in the market, if you are able to read using your logistic and also other references, then you will be able to understand, okay, the big players are trying to play against me, so let me also trade along with them and earn rather than trying to trade against them. So they create the market sentiment and trade and act against that of the traders. So let me not move with that of the market sentiment and try to see what the players are doing. Okay, they drop the market and buy, let me also buy after that drop. And they quickly rise the market to book profit, okay, let me also book profit. So if you could take a decision of that, then you will find trading is a child's play. So today, swing and rise move during that of the Japanese session, and dip and firm up moves during that of the European session, and swing and rise moves during that of the US session are expected. It is the 4th week of the month and the last week of the month. So volatile and quick rise moves may be seen, and second quarter ending time, players could make extreme moves to attract margin calls to traders who overtrade without stop. So that condition is very important. Not everybody is going to face margin call. Those who overtrade without stop or hedging might, and also those who have got the positions in derivative market, and if the position is making loss, if they wait during this week, the position might make more loss. So let me answer to the questions which are asked here. Duru Shangvi, does the majors timings apply to US and European session also? I have given the timings with regard to all the sessions. So early European session is from 8 to 9 GMT, 7:30 to 9 GMT, and 11:30 to 13 GMT, which will be the late European session. And US session, early US session is up to 15 GMT, 13:30 to 15 GMT, and late US session will be 19 to 20:30 GMT. Okay. Harold Thomas has got a question. How accurate is this live quote page? See, this live quote page has got certain limitations, and earlier I was getting the live quote page from the interbank treasury, and somehow people have done the sabotage and see that I am not getting that. So I just taken it from some other source, and there they set the initial lows and the highs, etc. But there are slight errors. What is just is, you look into 2-3 live market quote page and try to arrive at what is the initial high and what is the initial low. Sometimes you come across the previous day low is being shown as the low for today. Here, there are the errors because of the software. Still, we will be able to manage with this. I don't find any difficulty. Then Harold, did you took low and the high at 2:30 to 3:30 GMT? Yes, I had taken the low, initial low and the high around 3:30 GMT. So they start making or start setting the initial low and the high. So sometimes they set the high and later on set the low, or sometimes set the low and later on set the high. So if you note down around 3:30 GMT the initial low and the high, that will be fine as a reference level for the entire day till end of US session. The next day again we will come across initial low and the highs are being set. Okay, Darusha, initial low and the high. See, basically the players, even though they have got the huge money, there are a lot of restrictions with regard to the deal rooms in the banks. So in the deal rooms, they cannot openly talk to the other bank dealers and say that, okay, I want euro to come down or I want euro to go up. They cannot command like that because all the informations are being recorded. So if such informations are caught, and they could be punished vulnerably. So to avoid, they have got certain mechanisms by which they establish the communications among themselves. I cannot divulge all the details here. So they set around 3:30 GMT the initial on the high, and all the counterparts come to know that, okay, they are the initial lows and the highs to be followed in order to track the type of moves. Hope you are able to understand. I can't do any more spoon feeding with regard to this because it's a public forum. Please understand. You talk to some of the bank dealers and others, you will be able to get the insider informations. Okay. So no more questions. So just let me review the whole slide. So actually the derived forecast, use it as a guiding factor, nothing more than that. So use it as a guiding factor, and this is derived using statistical algorithm, but still it needs fine tuning during the day, and that is being done with help of market reading. So we note down the initial low and the high around 3:30 GMT and try to find out what sort of moves they are doing it in sequence. I explained to you many times, the sequence always they make the session start time, a false move or a stop and gap time, they might make a false move. Then they make the swings during that of the mid session. Then slowly when the volume builds up, they make an extended move on the downside for 2 hours. Then an intentional move on the upside for about 2 sessions and start of the third session. This is what they do. If you follow it carefully using the session time, you will simply laugh at them. Okay, I'm able to tell what's going to be the next move. You will be able to really take advantage of such moves and make money simply from that of the market. Then the trading strategy, whatever be the type of analysis we do, suddenly the players could change their strategy, or sometimes you might come across unexpected events happen in the market and which may trigger the market to react adversely. So we cannot take unlimited risk. So as soon as you take the position, keep the hedging order to limit the risk, or a stop to limit the risk. And once the position makes profit, keep stop at entry so that you eliminate the risk. First of all, if you want to earn, you should know how to eliminate the risk to start with. That is break even. And later on, you can maximize the profit using a trailing stop in profit making positions. So my advice will be, use a trailing stop in profit making position, use the hedging order in loss making position. As soon as you take a position, it will make loss, so use the hedge order, and once it's start making profit, use the trailing stop so that you won't miss any of the move. Suddenly if there was also, your trailing stop will protect your profit, so that will not become the adverse position. You can always take another position because market continues to give trading opportunity, and if you wait, you will get a better level to enter into the market also. Similarly, take profit also. Once they set the high, not breach the high for more than 30 minutes, book profit, and then look for another trade. And if you statistically calculate this is the level up to which it could come, then it may not come up to that and it may reverse. And if you don't have a trailing stop, then your minimum profit will not be protected. So this trading strategy is equally important to the market reading. So a gross forecast, what could be the possible moves in the market, then fine tune it with that of the market reading. Use the trading strategy so that we need not blame anybody. We can simply follow the trading strategy, and if you are able to make consistent money, be happy with that and use it for the prosperity of the family. Then the expected market moves for this particular week, I explained it. This webinar is being recorded, so you will be able to have access to this, and later on a daily basis you can refer it and find out what the session moves are. Then today I noted down the initial lows and the highs. Similarly, you can note down for the other days also on 3:30 GMT. You will be able to perceive by yourself. If you note down the 3:30 GMT, the initial lows and the highs in 4 majors and 2 commodities, you can find out what the players are trying to do, whether they are trying to take the market on the upside in a week or on the downside in a week. That will give you a more trading insight rather than any type of analysis you do wherein you don't have the day ending and day starting time. You continuously monitor the chart, and without demarcating what are the days, unless and otherwise it is a daily chart. And this is the forecast for this week. There are some questions, I think. How done use it for our benefit? I'm not able to really understand what he wants. And then Harold, the banks are trading within themselves only at the Asian beginning to create the low and the high. Yes, they do the circular trades. Okay. How is initial low beneficial to us? Okay. See, if we note down the initial low and the high, then we understand from there how exactly the players are making the moves in the market. So, if they set the initial low and not breached for more than 30 minutes to 2 hours, that means they are unlikely to cut the low during the session. Then they are expected to make a rise. Then you can, around that of the low, you can take a buy. they expected to gain up to that of the high or slightly above book profit. So that benefit us that they will not make a downward move. So you are able to take a decision on that. So again they come to that of the positive net change in both. So let us see how exactly they are finishing it at the end of the session. I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar, and I'll be presenting the next webinar on 1st July. That will be Monday of the next week, and from July onwards I'll be presenting again Monday and Thursday webinars, and so that I'll give that expected market moves for the week on Monday and review it on Thursday and explain to you how exactly they are trying to take the market. And that will give you an insight. And also from July I'll be giving the tracking the forex market together webinar, and so there you'll be able to understand then how the trading strategies are to be used and do an unbiased understanding of the market. You see, let me give you the forecast or anybody give the forecast and try to find whether it is suitable for you. Any trading strategy given by anybody, find out whether it is suitable for you, whether you will be able to consistently follow it, develop faith in it and follow it. So this sort of self-analysis is very essential for you to become a successful trader. Simply following X analyst for some time and Y analyst after some time and Z analyst after some time, that does not help at all, because you will be going helter-skelter in search of the trading ideas, but you don't develop trust with anything for that matter. So if you don't develop trust then in a system or in yourself, then you find that you think that always whoever gives the forecast which happened to be right in a particular moment is right, and later on you just blame him, and later on you try to follow and get confused and exit out of trading. So develop a calm mindset and try to see that what forecast or what methodology is suitable for you and try to follow it to become a consistent trader. Thank you one and all. See you on Monday. Wish you happy trading week.